For TRICHOMES.com, I'm producer David Fortin, and this is The High Ground. On this show, we feature leaders of the cannabis industry. We talk to everyone from farmers to CEOs and public officials, anyone making an impact on the cannabis community and beyond. In this episode, Betend talks to Rick Batenburg III, founding partner and chief investment officer of Cliintel Capital. Cliintel Capital Management Group was created to provide funding to emerging market companies. Rick talks about why he's feeling optimistic about the cannabis industry in 2021, the unique challenges the space has, and why brands need to make an emotional connection to their customers.
All right. So we are officially rolling. Let me just start by saying, Rick, thank you so much for taking the time to talk to me.
Hey, pleasure to be on. Thanks so much for your interest, and hopefully I can add some value here for you.
Absolutely. So I do want to talk to you about your path into the industry and how we kind of got to this moment. But let's just start in the first couple months of this new year. Can you kind of give me like a headline of how are you feeling these days about the industry?
Optimistic. You know, it's exciting, all the things happening, and it's vindicating watching the destigmatization of this industry kind of sweep across not only the US, but the world. It's definitely an exciting time to be alive, and to be in the thick of it is exactly where I like to be. So excited and feel very vindicated that the rest of the world has really come around to understanding what this plant is and, you know, its positive force on the universe.
Well, let's talk about how you got to be in the thick of it, as you say. You actually had a very different career trajectory going back to before you were involved with the cannabis industry. Why did you decide to leave Merrill Lynch?
You know, there was a few reasons, and they all kind of convalesce into a way that I felt like we had a competitive advantage and were able to make a bigger dent with less capital. Being in Colorado gave us a unique perspective in the way that we really saw the maturation of the cannabis space. And I could see the writing on the wall from a legalization perspective going, okay, I'm pretty confident we know what's going to happen here. And cannabis is going to get more legal, not less legal. So how can we best position ourselves to take advantage of this burgeoning cannabis market? So uniquely being qualified to raise capital and allocate capital from my previous experience at Merrill Lynch, and having a really opportunity with my father being an entrepreneur and angel investor for most of my life. We had a lot of the raw materials needed to put together a blind pool private equity venture fund to allocate across the supply chain in cannabis, with the purpose of really doing diligence and understanding where the opportunity is going to lie. Because when we first got in this business, you know, we really didn't have a diligence baseline on where we wanted to be in the supply chain. So we bought everything. So we bought everything from grow, extraction, ancillary, lighting, dispensary, compliance, training, everything you can imagine. We brought into the portfolio with the purpose of setting a diligence baseline and really starting to understand where we wanted to be in that supply chain. So in doing that, we were able to really kind of whittle that down into brands and distribution where we really wanted to be from a growth perspective. Mostly because we found that those have the most scale, right? To compare it to the liquor industry, you don't want to own the grain that's making the vodka, and you don't want to own the liquor store. You want to own the brand. You want to own Smirnoff. And that's really where it kind of shook out. We knew that we were going to need a very flexible funding instrument to really assess the opportunities in the cannabis space. So we used what's called a blind pool private equity fund, and we actually became the first venture fund ever to hold a licensed entity in Colorado. And the purpose of that was so that we could bring in outside capital without having to expose our investors to all of the risk associated with, in Colorado, we call being a red badge, which is an owner of a licensed facility. So it was a few reasons just to kind of put a bow on that. It was, one, there was a unique opportunity being in Colorado. Two, my father and I were very uniquely qualified to operate that type of an entity. And three, you know, I believe in the positive force of cannabis in the universe. I believe that it is a good thing. for not only medical patients, but recreationally. I think it's a lot less damaging to both us as a society and us as individuals as a intoxicant, if you will.
And so you've mentioned your father, and you of course did found the brand with your father, Richard Batenburg Jr. First of all, where was your father at in terms of his feelings on cannabis? Did this take any convincing, or were you guys kind of in the same headspace?
No, it didn't take any convincing at all, actually. I think the only convincing part
Interesting.
that I needed to do was the ability to take outside capital. My father's always worked very autonomously with his own money and been very successful at that. And I knew that to do this properly, we were going to need 10 times the amount of capital that we could allocate into this particular industry. So he had already made some private investments going back, I think, to 2014. And so when I left Merrill into 2015 to sort of formalize our strategy, he was coming to a close with managing the billing systems and truck rolls for Xfinity, Time Warner. So a few of the major cable companies he was running as a consultant and an operator for them. But he had experience in industries far and wide, everything from consumer packaged goods to infomercials to managing comedy clubs and radio stations as the CEO of a publicly traded firm. So wide, diverse background. But, him and I have always been very close and really, we don't always see exactly the same, but we use what we called Socratic Method to find a higher truth by, take a position, defend your position, and let's see how right we are. And so we make a pretty excellent team, and we have for the last 30 years. We'll see how the next 30 years go, but we're definitely on a good trajectory.
That's interesting. So how this might be a strange question, but do you think that you think about investing, you and your father, that is, sort of think about investing and your role in business or in an industry perhaps a little bit differently than your peers or other people? Talk a little bit about that Socratic method. Is that something that you've seen others employ?
Oh, well, Socratic is Socrates. And so, Socrates and Aristotle used to have very spirited discussions. So, what that really just means is I believe that vulnerability builds trust and trust builds relationships, and relationships are what build infrastructures and empires. So really, when I talk about Socratic method, I talk about vulnerable conversation in the way that you can be extraordinarily honest with your opinion. And it's so extraordinarily important to really have a tremendous amount of insight into how you really feel about, whatever it is, business, your life, however. And being able to accurately communicate that to another person is a skill set that is, I think, underutilized. So when I'm talking about Socratic method, I'm talking about, okay, well, if we're discussing the theoretical opportunity, 2 years from now and how we want to be positioned, well, I can apply my diversity of skill set and information, and he can apply his diversity of skill set and information, and we can work together to solve a problem. But you can only do that if you are very specifically open and vulnerable about why and what you feel and how you think, the things are going to shake out and what data you're using to support that argument. And so it ends up it's not about who's right. It's about what is right, if that makes sense.
Yeah, it does. You are obviously someone who has been in circles that I assume are part of what you used the term earlier that before we started recording. You talked about looking at what the sort of most risk-averse groups are investing in or thinking about. And you're perhaps a little bit closer to that than some of the other people that I've talked to who are, as you mentioned, the people who actually own these licenses, who are running these businesses. Where are they at with their thoughts on this industry? What have you been seeing from these most risk-averse groups?
Sure. So really simply, we have operational control of, about a 50,000 square foot grow here in Colorado, as well as an extraction in Colorado. And then we own Clear Cannabis Inc., which is the parent company of the Clear. So we really do have operational control and operate these businesses. And so we have a unique perspective in the way that, although I came from the finance space, we really have gotten our hands dirty in the cannabis space with the purpose of really understanding the business itself. And when you're looking at this business, you really have to look at it as its own unique set of problems and challenges, and really not because it's cannabis, but because of the regulatory restrictions state to state are so much different, and your inability to scale like a traditional CPG company because you can't take THC over state lines. Now, that presents some interesting problems that are really have to be uniquely solved just to the cannabis space, where you really don't see outside of international trade. So that would be the first thing, I guess, from a operational perspective that we look at when we're assessing risk in the cannabis space is, well, this is very different. All the regulatory issues are constantly changing, and they're going to continue to change, which means that you need to be able to stay nimble. Now, part of the reason that some of the bigger money has not come in is not necessarily because they don't believe that cannabis is the future or that there's a big market opportunity. It's because they've got legacy assets and or investors that don't want to be exposed to what that perceived risk of being in cannabis is. These bigger players, the U.S. investment banks and some of the larger PE funds and family offices, have been chomping at the bit to get in this, but it's really that legacy and stigma that has prevented these risk-averse groups from entering the space. Now, that is to say that we are definitely seeing a change in that allocation. A lot of these more traditionally risk-averse groups are now looking at cannabis as a possible growth market for them. And it's always said that big companies, big Fortune 500 companies, you don't build your way into new industries, you buy your way into new industries, right? So those larger companies, big food, big pharma, big ag, big tobacco, what they're going to be looking at is, and this was our position 4 years ago, which is why we focused on brands, is, they want brands that have an emotional relationship with the consumer and have good distribution into all of these locations, right? That's the type of companies that we're going to see get rolled up or get bought out by some of these larger, call them alcohol companies, tobacco companies, vape companies, anybody that really is already in, I'm going to call it the vice category. That's what they're going to be looking for. And likewise, that's what the U.S. investment banks and private equity groups are going to be the most interested in funding those buyouts. So that's the type of things that those big groups are looking for, right? They're looking for current revenue, right? So real revenue, real distribution, and a real brand that they can immediately buy and then scale using their resources. And that's the type of deals that investor groups are looking for, right? That they can look at a P&L, they can look at what the projected earnings are, they can look at forward earnings and go, okay, well, this is going to be an accretive acquisition simply because I can look at this and I know that 1 + 1 is 3, both from an operational perspective, right, and from a financial perspective, meaning, they get a higher multiple once they've bought the company. And operational accretive, meaning when they buy the company, they can piggyback on the distribution that currently exists, as well as capitalize on bringing that new product onto their distribution, right? So we have a thrice-ly creative acquisition potential that we're going to see especially accelerate as the Safe Banking Act here hopefully goes through the Senate.
And when it comes to, you mentioned the Safe Banking Act, when it comes to these legacy groups, how connected are they to federal legalization? How connected is that to them sort of getting there in terms of being fully comfortable? Does that even get them fully all the way there? Or some of this has to do with, fear about potential pushback, I assume, from oversight bodies and stuff like that down the line.
Absolutely. You're absolutely right. And everyone has their own risk tolerance, right? And everyone sees the market a little bit differently. So, if I'm a New York investment banker and maybe the juice isn't worth the squeeze because I can do it, betting on biotech or someone else. But the upside is really going to be in the first movers that have the same position I did 5 years ago, which is this is getting more legal, not less legal, right? So once you've made that decision, then it's really about, okay, well, where do you want to be in that space, right? How are you going to take a position in that space? So federal legalization, I think it definitely has weighed a lot on those larger groups, but not necessarily just because they're afraid of pushback, but also because the business model is so much different and more capital intensive when you can't move THC over state lines, right? That really limits your ability to scale in a traditional sense. And it gives you, I would also argue that a lot of these cannabis deals, the risk is already priced into the deal. It's not, we don't have any new systemic risk. It's only gotten less risky to invest in this space over the entire, the 6 years that I've been in it. Every year, it's gotten a little easier to invest, a little less expensive from a cost of capital perspective. And but with that decreased risk, you can't take a big bite of the apple because some of these cannabis companies are really becoming new, that's the new growth market, and they're full with better executives that are making better deals, that are making less mistakes, and the valuations are getting higher, which means you're not going to have as big a growth potential on the capital you're investing.
Switching gears just a little bit, how has what's happened with the pandemic changed the way that you think about this industry? Has it sort of proven anything for you in terms of I've heard the term recession proof kind of thrown around. Did this feel like a proof?
Oh yeah. I mean, here's the thing: is that Vice performs in good markets and bad markets, right? And the truth of the matter, and is to bring this down to a very personal level, is that people still like to get altered, and they like to get altered more when they're bored. And if there's anything that this pandemic produced was mental health issues of people being secluded. We are social creatures, and we saw Clear and our other assets sales increase during the pandemic. Now, there was definitely some unique challenges with keeping production going with the COVID restrictions, because obviously we are an in-person production facility. So we have very high standards of our employees and the safety that is put into the just overall workspace, but also in just the process of producing the products themselves. So, it was definitely a new set of challenges, but it did not affect sales in the cannabis space. If anything, sales went up, but that's a little bit of a French painting to analyze, because sales are always going up in cannabis. They're on a direct angle up. So some of that may have had to do with the pandemic, and part of it has to do with there's more people every day smoking cannabis legally.
Mm-hmm. And you've used the term a couple times, referring to cannabis as a vice, and I assume that you're referring directly to the adult use recreational market.
I am, yeah.
But cannabis, right, and at the same time, cannabis does have this interesting, unique position as both a vice and a medical or a therapeutic treatment. So I wonder what unique challenges does that positioning pose to brands, companies, corporations, etc.?
I believe that we're going to continue to see a march towards adult use, really mostly because managing two platforms, medical and rec. We saw our first state jump straight to rec. I think we're going to continue to see that type of path. Normally states go med, and then they get comfortable with that, and then they jump straight to rec.
Right.
I think it's unlikely that we're going to see the medical market continue to expand outside of in an adult use market. And probably the best example of that is the Colorado market, which is the most mature cannabis market in the world. Right. We've seen decrease of people renewing their licenses and their medical program. That's not to say that the medical program is not strong here still. It absolutely is, but it is not growing nearly at the rate that the recreational market is. And it's mostly because generally it's the same product. So unless you're a really heavy user, outside of the additional taxes, there's not a whole lot of difference in the quality and or the product themselves. So from a medical perspective, there are some really interesting things happening in the cannabis space. But I think that the cannabis space is going to develop a lot more like the liquor industry than it is like the pharmaceutical industry, partially just because of the nature of the product itself.
So that is really, really interesting, because some of the big players right now, both in the U.S. and Canada, are definitely playing in both markets, or brand themselves as a medical cannabis company in some way. And do you think that we'll start to see shifts as well, let me ask the first question, which is are you kind of saying that from your perspective, the money is in the adult market?
Yes.
For people who do what you do?
Yes.
Right. And so I guess what I'm wondering is, as things open up, will we see some of these brands kind of pivot and focus more on that side of the business?
Absolutely. And think of it this way. I mean, it's not more complicated than the available market is so much
Yeah.
bigger in the recreational space. So, I mean, just numbers, just specifically when you look at what is the market potential of the adult use market versus the medical market, it's incomparable, right? There's no comparison on what we anticipate actually happening. So when you look at it that way, a lot of these, let's call them larger companies that have taken a medical position, if you will, is really about the capital stack being more comfortable investing into medical cannabis because their perceived risk is decreased. I would argue as a venture cap in this space that it was already priced in and they're just being risk averse for no reason and they're losing a lot of the upside. But I think that we will definitely see a shift as recreational goes federally legal. And, we're just continuing to march that direction.
So you've mentioned a few times this concept of a brand that has an emotional connection, and that a successful cannabis brand is something that you're looking for, that we don't quite have a successful cannabis brand yet, or that they're trying to kind of figure it out. Do you have a sense of what that might look like? And yeah, what are you kind of looking for when it comes to a brand that has the ability to create an emotional connection with its audience?
Sure. So probably the best way that I can give you an example of what creates a brand, or how do you know a brand really exists. So one of our portfolio companies, The Clear, is the number 3 brand in Colorado, but it is being sold for $2 at wholesale above the next closest competitor. Okay. So even though the sales by revenue are not quite as high, the at the retail level, I think we sold about 17.5 million in 2021. The next closest competitor being Evo Labs, which sold just about 18 million. We're selling our pens for $2 per pen above that, right? So 15-20% above that next price, which tells you something, right? It tells you that people are willing to pay a premium for a comparable product. That is specifically the definition of a brand. So as we're evaluating different companies and moving into these different markets, we're looking for companies that are able to charge more because it is that brand, right? That is the perfect kind of simplistic look at what a brand is, right? Are you willing to pay more because it says this brand on it, because there's an expectation of quality, performance, whatever it is, there's a relationship with the consumer that they trust the brand, right? So when we're looking at evaluating, does this company have a brand? Well, are they competing on price? Okay, that's not a brand, right? They're a low value, it's a value brand. It's not an established brand. So and you can be anywhere in the good, better, best strategy of where you're at, but are comparable products being sold at, below, or above what your price point is. And that's usually a pretty good metric to look at as far as whether or not you've established a brand presence. So, that's really what we look for is the relationship with the consumer as manifested by, are they willing to pay for it?
That's very interesting. What we've seen with politics in general, the Biden administration coming in, not to mention Democratic control of the Senate, how does that impact the sort of venture capital class? Does that in general engender excitement about the future of the industry, or
absolutely.
How do you just think about that? Yeah.
Absolutely. Oh, yeah. I mean, every little step towards legalization provides larger ability to scale, easier to operate the business, more available market of human beings that are smoking it, vaping it, eating it, however you prefer. So any kind of march towards legalization, it is exciting, and it allows us to operate more freely like a normal business, right? And that's really the goal, is to get to a point where we are regulated, much like alcohol or some of our other nationally exportable goods, so that we can really bring these brands and products not only just nationally but internationally.
And are you at all concerned about the idea of hype around cannabis? Perhaps that people are getting a little ahead of themselves in terms of where we're at in the timeline?
No, everyone's been pretty excited about cannabis for a long time. And really, we saw the real hype was peaked in November of 2018, where you were seeing
Right.
valuations 118 times forward earnings, and just crazy valuations because everyone was so excited. And if there's one thing I've learned in cannabis is patience. Things take a while. They just do, especially at a federal level, but even at a state level, things just move at a crawl all the time. So it's really about being positioned and doing the business well. Part of this really is just not burning out too quick. Make sure that you've got strong fundamentals, that you are able to make EBITDA with your available market, not with what you might be or what is coming, but what can you do now? Can you make money with your available market? Can you make money in Colorado? Can you make money in California? Can you make money what you're doing now, not what you might be able to do later? And that's really how you have to look at this market. It has to be evaluated like in any other business. These pie in the sky valuations are damaging to the industry. And that's where I 100% agree with you in the way that people getting overly excited about the opportunity is usually people who have not been in the space very long. But, I've never made a successful pessimist. So, it takes a little bit of crazy to make it,
Yeah, that's really interesting. How has Colorado House Bill 1090, how does that impact you?
So what I think you're referring to, if I remember, forgive me, but I believe you're talking about the ability of public companies to own licensed entities in Colorado. Is that correct?
Yes,
Yeah.
My fault. Yeah.
No, I'm just making sure. Just a lot of numbers thrown at me. So it's good. It's an excellent thing. I mean, it's part of the march towards being regulated and controlled like a normal business. And we actually were the first group to ever be able to hold a licensed entity within a fund structure. So that sort of vindicated that effort, if you will, in the way that we knew that was going to be coming, which is why we were kind of ahead of the curve. Just because with more eased restrictions on who can invest, it allows more better innovation, better human beings, better employees, better tracking, better products to come into the space because there is specifically scale inside of the business. You're able to create more with better R&D and better scientists and better products, which eventually lead to a more formalization of that specifically of the products themselves. It's a good thing. Anytime we're marching towards the destigmatization, it's a good thing.
Yeah. Small twist in subject here, but in looking at your portfolio, you guys are heavily invested in the cannabis space, and then I noticed among your others, there's what looks like a hockey team. Is that correct?
Yeah, when I was still at Merrill Lynch, I created a professional hockey team in Breckenridge, really because I was sick of playing men's league after working at Merrill Lynch, and I made a decision to kind of leave my professional career on the table and go work for Merrill, sell my soul, if you will. And it was I wouldn't call it a regret, but it definitely changed the output of my life. So about 3 years into working at Merrill, I decided to create a pro team really because I wanted to play good hockey again. And really to fund that, we had to market the team and create, a following. So it's a lot of fun. I own the team. My father coaches and I play. So we had a little Penguins and Mario Lemieux situation, but it's a lot of fun. And it gives the townspeople in Breckenridge something fun to do on a Friday and Saturday night. We sell those games out. It's a riot. So we have a lot of fun with it, but it's his and I kind of an expensive hobby, if you will. We have a lot of fun, but I think last year was the first year we ever broke even, but it's I wouldn't call it a portfolio asset, more like a expensive hobby, but it feels really good to add value.
That's so cool.
To the townspeople and to the town itself of Breckenridge. Where I grew up skiing there, and we grew up back and forth between there and Denver. So it's really fun to contribute to the culture of Breckenridge, and it's a lot of fun playing hockey. So.
Rick Batenburg III is the Chief Investment Officer with Cliintel Capital. Rick, thank you so much for taking the time to talk to me.
Hey, thank you so much for having me on. Very grateful. Always happy to help. And if there's anything else I can ever do, you know where to find me.
We want to thank Rick Batenburg III of Cliintel Capital again for taking the time to talk to us. You can find more cannabis industry reporting at TRICHOMES.com, as well as more great shows like this one. If you're a member of the cannabis community and you have a story you want to share with us, reach out. You can reach the show at highground@TRICHOMES.com. Please take a second to subscribe to the podcast and write a review. It really helps others find the show. You can also join the discussion with industry insiders and get your voice heard by joining the community at TRICHOMES.com and following us on all social media. For TRICHOMES.com, I'm producer David Fortin. Thank you for listening and be well.